Hey, how's it going, everybody? Mike Weber here, your Los Angeles real estate broker, with your real estate market update for Los Angeles County and the South Bay Beach cities for the end of 2019, December, or the very beginning of 2020, January. First off, I hope everybody had a wonderful holiday season and an excellent New Year's celebration, and look forward to keeping you updated this year on what's happening here in the local real estate market. So this is going to be an interesting video because what we're seeing in the local real estate market is a dramatic heat up, or we can even call it a melt up, which is similar to what we're seeing in other markets like the stock market or even the gold market currently. And I would say that this is directly and absolutely correlated to the Federal Reserve's actions over the last year and a half. As many of you know, beginning to middle of last year, the Federal Reserve sharply changed directions and started heading back towards extremely low rates with rate cuts, dovish policy. And then towards the end of last year, the Federal Reserve started to enter the market and do what is being called not QE, essentially flooding the market with liquidity. And so we could say from the Federal Reserve's funny money policy, as well as the incredible low rates that are pervasive in the market, that is directly leading to takeoff again in real estate prices in the real estate market, lack of inventory, and ultimately a melt up in real estate prices. So let's go ahead and jump into the data and take a look at what's going on. Of course, the end of the year is a slow time for real estate, generally speaking. So we're going to see less inventory out there. But regardless, we're looking here at year-over-year figures. So it at least gives us an idea or a comparison to what happened in December 2018. And we are taking a look at how that compares to what happened at the end of December 2019. So getting started, we'll take a look at what's happening at Los Angeles County as a whole. And what we see here is that year over year, compared to December 2018, real estate median home prices are up 8.2% in Los Angeles County. So that is a dramatic increase in prices in 1 year's time. Now, granted, prices had started to kind of soften towards the end of 2018. It wasn't a super strong year, but regardless, year to year, we are up 8.2%, which is pretty dramatic. And again, that is directly correlated to the Federal Reserve's policy, the low rates that were pervasive in the market during that period of time, etc. Now, if we take a look at the supply of inventory, as expected, it is going to fall rather substantially for December. And as you see here, it actually fell. The only other time really was at the end of 2017 that we saw a similarly low inventory level, unless you go back a very long time. And as you see here, 2014, 2015, 2016, inventory has just kind of trended downwards. But then in 2018, when the Fed became a little bit more hawkish, they started to raise rates a little bit. They indicated they were going to roll off some of their balance sheet. As you see here in December, we still had 3 months of inventory on the market. But now with the change and what the Fed started to do last year, inventory just dropped off a cliff, and essentially we went back down to this 2017 low with very little inventory currently on the market. If we compare year over year to December 2018, we're down about 30% year over year compared to what the inventory was at that time. Now, if we look at closed sales, again, same trend. We're seeing an 18.1% increase year over year comparing December 2019 to December 2018. And you can kind of see here, this is December 2018. So a big jump in the number of sales that took place in December. And again, this is a result of the low interest rates that are out in the marketplace. Now, if we dive in, we take a look at South Bay in general. This will give us a pretty good feel for what's happening in the South Bay market. And we see an even more dramatic year over year median home price increase of 14.5%. Now, that's pretty remarkable, 14.5% in just a year's time. Again, the same trend applies. As the year went on in 2018, prices really started to kind of come down in the South Bay. So they kind of, ended at a low of $690,000. And in just 1 year's time, they're all the way back up to $790,000. So a substantial increase, the low rates, as well as a lot of other changes in the opportunities for financing, such as loan limits increasing, all kinds of new creative loans to allow people to get financing, things like no doc loans, only 1 year of income needed to qualify, all kinds of strange products that are out there that are allowing people to get loans that otherwise wouldn't have been able to get them several years ago, are all responsible for this substantial increase in year-over-year prices that we're experiencing. Now, if we look at the supply of inventory, again, we see the exact same trend that we see for Los Angeles County as a whole. We're down to 1.6 months supply, which essentially is almost nothing. If the average escrow is 30 to 45 days, then in reality, we only have enough supply on the market currently to satisfy the immediate need for housing in terms of what the time it will take to actually get through the escrow, which is a very low amount of supply on the market. So you can certainly expect a very, very competitive environment out there for the average house that a buyer might be looking to go after. Now, if we take a look at closed sales, again, we see the same trend as in Los Angeles. We're up 23.8% year over year. And again, this is directly related to the low rates and all the new availability of different types of loan products, increased loan limits, etc. So what is the market going to look like in 2020 based on what we're seeing and what's happening with Federal Reserve policy in the markets? I'm going to guess that we're going to have a very competitive market throughout 2020. Certainly, it looks like prices are going to continue to trend upwards. Inventory is going to stay low. It does not look like the Federal Reserve is going to raise rates anytime soon. In fact, it looks like they're going to continue to lower them and do everything they can to stimulate or to push the economy and asset prices higher. So we'll have to see what happens. We'll obviously be following it closely. Let me know what your thoughts are in the comments down below, what you're seeing in your local market. What your thoughts are on what's going to happen with policy over the next couple of years and how that'll affect local real estate prices, etc. If I can help you with anything that's real estate related anywhere here in the Los Angeles County area, I'm a phone call away, so don't hesitate to reach out. Appreciate you watching, and I'll catch you guys next time.